Hello and welcome to the week ahead video. A very busy start to September because of a critical schedule of releases this week from across global central banks and in fact tier 1 data, also due particularly on Friday where we see the US non-farm payrolls. To start off with the central banks though, on Thursday we see the ECB rate decision for the month of September. This again, as always, is critically awaited as many tier 1 investment banks are bringing forward their expectations for imminent QE out of the ECB. The only question mark really is to what sort of form this QE could take, as the ABS market, which the ECB have been touted to buy from, still does not yet really exist, as they're only eyeing transparent and simple asset-backed securities, and that market, due to EU regulations, simply does not exist at this present time. As such, many have looked towards outright QE or even private QE, which could involve the buying up of private debt in the Eurozone to help stimulate monetary activity and help boost flagging inflation across the Euro area. Nonetheless, we did see ECB sources towards the tail end of last week saying that there's still no real consensus among the ECB Governing Council. As such, we may see action from the ECB, but not as soon as this Thursday. Nonetheless, the critical value of the euro, which still remains high according to a number of European ministers, will depend on this Thursday's ECB rate decision. On that day, we also see the Bank of England's latest release. They're also expected to keep their rates unchanged. The minutes from August showed that there was a split, with Wheel and McCafferty voting for a 25 basis point hike. It's unlikely that some of the more touted names, the likes of Andy Haldane and Ben Broadbent, are to join this month, as due to the flagging CPI data we saw just a couple of weeks ago. We also have the Bank of Japan and the Reserve Bank of Australia. Neither of those are expected to make any changes to monetary policy. The Bank of Japan, though, could become more interesting towards the end of the year after the second phase of the sales tax hike in Japan takes effect, where some BOJ officials see easing policy further to counteract the economic conditions of higher sales taxes in the Japanese economy. Then on Friday we have the key non-farm payrolls reading. Another bumper number is expected at above 200,000, as focus does still remain on that wages data, with the FOMC looking towards the quality of the labour market as opposed to the quantity to measure up the next FOMC rate hike. Then finally, on the geopolitical scene, the bloodshed in southeastern Ukraine continued well over the weekend. The EU summit showed that the Russian President Vladimir Putin is to be given 1 week, and 1 week only, to de-escalate the tensions in eastern Ukraine before facing any further measures in regards to sanctions, which won't necessarily include further sectors of the Russian economy, but could just close the loopholes of those sanctions that are already in existence. Of course, we'll bring you all those key releases though as soon as they hit the wires, as well as any other relevant commentary to your trading. In the meantime, that's all from me. Make sure you have a fantastic 5 days of trade.